Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about Astral. In a league of its own, the company has been doing well on the ground as well as a stock. So the stock has gone up sharply over the last 2-3 months after the June fall. Let's understand about the business in complete detail and also about the valuations as to where it can be bought and held on to for a longer period of time. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Astral, here's a small request. Kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. Also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. Now about the company. Established in 1996, Astral is a leader in range of plumbing pipes and solutions, and they manufacture a number of hot and cold water pipes, plumbing instruments, and resins. There's a high profit growth and return ratios for the company, and profits have grown at northwards of 20-25%, and ROEs has also increased. They also make agricultural pipes and insulation tubes, and they have also ventured into a number of other segments like paints and adhesives, etc. One of the fastest growing infra housing ancillary stock, and over the last 6 years it has grown many folds in terms of market cap. The market cap of the company now stands at around 47,000 crores. If you look at the financials, sales were pretty good this time around on a lower base last time, you can say on the June quarter. So sales went up by 70%, over 70%, and profit went up by 17%. So there was a lot of hit on the margins, but yet there was a increase in profitability. Other companies had a degrowth or flat profit growth, other companies in the same sector. That shows the pedigree of Astral. There's low promoter but high institutional holding at 40%, and they have been buying a lot over the last year and a half. Now the stock has stretched at the moment. ROE of around 23% is pretty decent. Margins at 14% is best in the industry at the moment, although it has dipped from 18-19% earlier. So if we look at the results at a glance, margins are down. As I said, operating profit margins are down 400 basis points year on year, but remained stable Q on Q. So there was a understanding that okay, margins may get hit because of higher raw material cost, higher oil prices in the June quarter, but that didn't happen. That tells you that the company has the pricing power, and they passed on most of the price, you can say, cost effect of the higher raw material through to the consumers. Has gradually increased market share over the last 3 years and have become leader in space. And it was a mid cap, a very small cap company just about 5-6 years back, and it has gradually made its way through to becoming a larger mid cap at the moment. They have diversified into a number of consumer segments, and they're into paints, adhesives, other kinds of plumbing instruments, and you can say housing instruments, and they're doing better than 3 years ago. They're doing well in all the segments, and will have a segment wise distribution in terms of the numbers also going forward. But I believe demand will only come in this festive season. This is going to be after 3 years that demand is going to be big, and so the company is set to do much better. And probably that's why on the you can say on the promise of that, and it looks like that October to March could be big, that the stock went up sharply between June till now, although now it is consolidating. So numbers are set to improve, although the stock is stretched, but overall numbers should improve going forward. So this is the revenue picture over the last 3 years from FY19 to FY22. So from 2500 crores in FY19, we are at 4400 crores, nearly doubling the revenue, even though we have had very dismal or very difficult 2 years. But over the last 3 years, the profits have grown by around, the sales have grown by around 70%. In terms of profitability, it's even better. From 200 crores, profits have gone to 490 crores in FY22. What that tells you is the leadership of this company altogether. The profits have grown by 240% or something like that, 2.4 times from around 200 crores. And that tells you that there's a long way to go for this company. Although we are going through a very difficult phase for the housing ancillary plays, but the company is still doing well. Now this is where things got a little difficult, but even here also they have managed to pull out margins closer to 17%, and in FY19 they had margins of around 15%, so that has grown by 200 basis points from that FY19 numbers. Remember 2020 and 21 were the pandemic years, so the margins were better, but still profitability got hit. And now when things are normalizing, there is a issue that what happened in between 2020 March to 21 March is that the raw material, the biggest raw material for the company, which is more or less paints, did not means did not for paints, the raw material is oil, and the oil prices did not go up that much. In fact, oil prices slumped during that 1 year, so the margins remained robust. But now with higher oil prices coming in FY22, margins got hit. But now I think things are stabilizing around those 17%, around that 17% mark, and hopefully going forward by FY24 we'll have margins of 19-20%. This is the sales segment wise breakup for the company. So around 77% or majority of the sales comes from plastic or plumbing equipment, plumbing pipes, etc. And 23% is adhesives. Now you need to understand that that 23% was extremely less 4 or 5 years back, around 8 to 10%. That has more than doubled over this period, and they are putting a lot of focus on paints and adhesives, and that's where the business is getting a better margin because there is a lot of demand. Even though we have a very large player having 50% of the market share, these companies like Astral and Grasim are putting a spanner into their margins and into their you can say sales share. And so we are seeing a growth in Astral in terms of adhesives as well. So this is the year-on-year product-wise performance for the company. Plastic division did extremely well, a growth of 74% from June of 2021. And look at adhesives, they have done nearly 340 crores of sales versus 200 crores, a growth of around 70-72%. In terms of margins, yes, the plastics division from 15% have dipped to 11%. That's a 400 basis point hit on the margins. And similarly adhesives have had a 600 basis points hits from 15 to 9%. So yes, margins have got hit, but in terms of volume they are doing extremely well. And that tells you that, because you need to understand that rather than looking at plastics or the plumbing pipes division, which entails the plastics part here, if you look at adhesives, the growth has been phenomenal in a very difficult environment, in a very difficult industry in which there are a lot of players, but yet they are growing at 70-75% sales growth in this division. That tells you that they are trying to make a mark in this field as well, and for that they would have to take a hit on margins, and that's probably what has happened, that in the adhesives division they had to take a hit of around 500-600 basis points in terms of increasing their market share, and that is probably what they are doing. That could be the only reason why sales would have gone up that sharply, because overall in the adhesives or paints division or this sector, volumes have not grown that much over the last 2 years. So I believe that they are getting into other market shares as well and doing better there as well. So as I mentioned, in terms of different product divisions, they have done extremely well, a growth of 70-75%. Now let's understand how the valuations stack up and what are the major other points for the company that we have to take into account. So some important pointers with respect to Astral. The company has a presence in four countries majorly in the world, which includes India, the US, UK, and Kenya. And it earns 9% of revenue from its international business. 91% of the business is in India. So there is not much of a or major impact that would come in from the effects of the economic condition in Europe or US. In October 2021, it had entered into the sanitary ware business, as I explained, and which has an estimated market potential of around 15,000 crores, and they are doing well there as well. The capacity of piping division has increased nearly 90% since FY16. They have nearly doubled that. Its capacity utilization has been around 57% in FY20. Now FY20, remember, just in the last 15-20 days there was a shutdown, etc. So they would be coming back to the same capacity utilization by now. I presume that, although I didn't get any numbers for this. The company has a base of around 800 distributors, 31,000 dealers for its piping business, and around 1,300 distributors and 130,000 dealers for its adhesives business, which is doing extremely well. So that also tells you that their focus has been on the adhesives business, which has had a higher margin, and I think they're going to go all out to gain further market share in the same division. In terms of valuations, if you look at, so current EPS is around 24 rupees, and expected in FY23 to be having an EPS of around 30 rupees. The way the first quarter numbers have panned out, they should do an EPS of around 30 rupees, and currently it is trading at around 79-80 times, around 76-77 times FY23 EPS. But I believe in FY24, that's a year and a half from now, we could see more traction leading to better profitability for the company. So I believe that in FY24 we should have an EPS closer to 40 rupees, and even if we take a PE of around 75 for the company, which is on the higher side, but I think because of its pedigree and margins picture and other things that they are doing and gaining market share, they could have a PE closer to 75 rupees. We could see the stock trade at 3,000 rupees in 18 months time. Hence I believe that the stock is slightly overstretched, because I don't see the stock go beyond 3,000 from an 18 months perspective. So what one needs to do is a dip towards 2,100 would be a very good levels to get into the stock rather than buying now. Or you can probably start your buying from here and buy big around 2,100. So in my opinion, those who hold at lower levels, say 1600, 17, 1800, should continue to hold. I think this can consolidate for about a month and a half, and then go up higher. For fresh entry, I think wait for around a 10% decline, and around 2100 would be very good levels to get into. Extremely good long-term pick. I think in the next 3 years could double in the next 3 years. I think could even go to 3,800, 4,000 in that period. But allocate less than 10% of your total investment into the stock. And I think the best way to buy into the stock is during market stress, or when the market falls big time. That's when you go ahead and just add a few shares of Astral. So this was my video on Astral. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.